The price of gold has been on fire recently. On 5th of February, the price of gold per 10 grams hit rupees 87,000. At the start of the year, the price was around 78,000. Now 90k doesn't seem to be far away. In fact, talk of 1 lakh is now doing the rounds. In the global market, the gold price has hit $2,900 per ounce. This is already up 11% in 2025. So, what explains this surge? Why is the yellow metal in such a strong bull market? We'll find the answer in this video. But first, please note that this video is for information purpose only. It's not a security recommendation and should not be treated as such. There is no opinion or view on any security covered herein. 1. Fear of trade wars. In a nutshell, uncertainty surrounding US President Donald Trump's tariff policies has raised the yellow metal's safe haven appeal. Gold has always been a safe haven asset. People flock to gold either when times are tough or when there is uncertainty in financial markets. Recently, uncertainty has increased due to the threat of tariffs from the US. Trump's decision to impose fresh tariffs has raised concerns of a global trade war. Trump has imposed 10% tariffs on imports from China. In response, China has imposed 15% tariffs on imports from the US. A major universal tariff of 25% has also been imposed on aluminium and steel. This will be applicable on all countries exporting these goods to the US. There have also been reports that suggest Trump might consider tariffs on European countries too. In fact, at the time of recording this video, there are reports about Trump announcing reciprocal tariffs on many countries. Clearly, the markets don't like this uncertainty regarding trade. The second and third order effects of these tariff policies will only be known later. This uncertainty has caused fears among traders and investors about the impact of the tariff policies on the profits of many companies. Thus, some investors have begun to take defensive position in the markets. This involves selling some of their stocks or reducing their exposure to them and moving the funds to safer assets like gold. And then there is inflation to consider as well. Trump's tariff policies might have a negative effect on US inflation in the short term. In that case, the US Fed may not cut interest rates. This would be another big blow to the stock market. 2. Geopolitical uncertainties. Trump's Middle East policy has rattled many people in the financial markets. The proposed US plan to take over Gaza has sent shockwaves across the region. Many countries in the Middle East have described the plan as destabilizing. This situation is certainly positive for gold. Now, it has been reported in the media that the details of Trump's Gaza plan may be too complicated to be practical, but the very fact that such a plan has been proposed seriously is enough to worry financial markets. The last thing that markets want is another war in the Middle East. Money has flowed into gold in advance as a hedge against this possibility. Fear of missing out, FOMO. Gold is an emotional asset, perhaps even more so than stocks. Whenever the price of gold rises, everyone starts to talk about it. And these conversations creates a desire to buy more gold. Those who didn't buy at lower prices feel a fear of missing out. People hear stories of those who bought gold at rupees 45,000 per 10 gram and have now almost doubled their investment in just a few years. This makes them feel that they have missed out on a great opportunity. This feeling of FOMO when the price of gold is surging creates a strong motivation to buy more of the yellow metal. This is especially true in exchange traded funds because ETFs enable quick buying and selling of gold in electronic form. We have already seen this happening as ETFs have become very popular with retail investors. Conclusion. Unlike stocks, real estate, or cash generating businesses, gold does not produce any income. This means its value stems from its ability to preserve wealth. And gold certainly has a great long term track record of preserving wealth. 2024 clearly reinforced that view. In 2025, we could see a repeat performance if trade wars intensify, or inflation remains high, or if an actual war breaks out. The year has certainly started with a bang for the yellow metal. We at Equitymaster believe that gold is an indispensable part of a financial portfolio. It makes sense to hold some gold as a long term asset. Having about 5 to 10% of one's portfolio in gold at all times makes sense. But it does not make sense to speculate on short term price movements. Also, while considering an investment in gold, have a time horizon well beyond 2025. Just because prices have gone up recently does not automatically make gold a great investment. Finally, don't see gold as a substitute for any other asset. Do your due diligence before investing. Thank you.